Hey, welcome to another video. The last few weeks, we've really been focusing on looking at the scalping approach with the DTB system of tools. So thanks for jumping on to this video. We're going to look at the template that was recently shared and also some of the results that we've been having with this template. So we're seeing a chart at the moment on the screen. This is what the chart looks like, and we'll go into how that is set up as well as how to trade it. So there's been a lot of questions recently about how to trade it specifically, what to look out for, and even just how to set it up. So we'll be looking at that now. So as a DTB member, you have access to a script which has been very kindly developed by one of the subscribers of DTB. So very appreciative for not only the feedback that I've been getting for the system, but also the guys in the group that are subscribers who are putting in their own efforts to make the system better. So really appreciate that input. All right, so when you have access to the DTB system for your weekly, monthly, or 6-month subscription, you're going to have access to a download script. Now, we've covered this a few times on a few different videos, but I'll just bring that up again on the screen just so we can see what that looks like. There we go. So that is what the script looks like. It's going to have options in there to download the system, which is, first and foremost what subscribers do. But when we are specifically looking at templates to work with, we select, even while NinjaTrader is open and running, we select option number 2 in here, which will automatically download any templates straight to the DTB or straight to the NinjaTrader platform. So very often we are creating new templates, we're creating new documentation for those templates, and it is very helpful to start NinjaTrader by downloading those templates and using the script. So this script is specifically designed to update all the templates for the DTB system, but it's also designed to launch NinjaTrader in a high priority. So that just gives NinjaTrader preference over your system resources, which is very handy. So with that script run, you're able to open up a chart. So we're looking specifically at a DTB analytical bars chart. Now I'm just going to deactivate this camera so we can see more of the screen, and I can actually look at the screen and discuss that. So give me 1 second while I do that. All right, perfect. Okay, so the settings of the specific chart we're looking at. Now, the good thing about this template is it can be applied to any size chart. So whatever size chart you're working with, this one is more for small scalping for, accessing or generating 20, 40, 60, 80 ticks, like scalping. So it's like really scalping the market. As soon as you're scalping 20, 40, 60 ticks, it's basically scalping the market. So we're going to be loading just enough data on the chart so that the indicators can actually calculate everything very accurately. So DTB analytical bars 2020. So each bar is 20 ticks, and I'm just loading 5 days of data. You can load 2 days, 3 days, should be sufficient. And I've got break at end of day on. Okay, so those are the main settings for the data series. Now, the next thing that you would do once you've loaded up that chart is right click on it and go to templates load. And in your list of templates, you're already going to have the DTB template. So all the DTB templates that you have or that get downloaded with that specific script are the ones that have DTB TT00 at the end. So these are automatically downloaded to your platform. So you're able to just click on that template and load it. And immediately you're going to be seeing your chart look like this. So you don't have to manually now go and add in all the indicators, because all the indicators and tools, or all the indicators, are automatically downloaded to your platform. So if you guys are watching that live or you are watching it in replay, go and do the same thing. And once you've done that, it is a good idea just to go and review the settings. So they're supposed to carry through when you in the template, which they most of the time do, but I've had some occasions where some of the settings are not transferring across. So I'm just going to review this over here just for you guys to see, but we've got a 20 period for the shadow trading. Everything else is default. The trend following is also a 20 period sensitivity. And the breakout volume, we've got crimson is the first template on each tick. So we've got, so if you load up this if you load up your chart or the indicator list like this, you can also click on the template load and load up the different colors. But on this one, we've got the crimson, it's on each tick. We've got the Dodger blue on each tick, and we've got the orange on each tick, and I've also got the white on each tick. Okay, so those are the settings for the indicators on the chart. All right, and then you'll get something that looks identical to this. So depending on obviously what period of the day you're working, you're obviously going to have your breakout markers and everything at different locations on the chart. Okay, so I traded this earlier today. If I go back a little bit, it's a bit hard to see. Let me just go into my data series and activate my text and markers. All right, so so far that's been my entries today. Now you're not able to see the markers and stuff around my entries because they've obviously repositioned. So they do reposition as the price moves. Like as you can see right now, the blue marker, the Dodger blue marker, is trailing the price. So as soon as that marker is left behind, we can actually take a position, with that marker in mind. So we'll see lots of those during the session, depending on how active the price is. But these are basically my trades. I traded a little bit this today, and I also did a little bit during yesterday's session, the Asian session. So there's my entries from yesterday. So if I just bring up my trade performance specifically on those trades, I'll just look ahead. So a few trades there. Now I did have an automated strategy running on the same contract. So that was that automated strategy ended with, it basically went into a slight drawdown and then it actually recovered. But more importantly, we're looking at the scalping of the chart that we're looking at. So all the ones where you can see a strategy, which is basically the ATM, those are the entries that I executed. So I'll look at today's entries and we can review those. So we've got the time is, because I'm in Australia, we got the market opened at 6 p.m. So these are the trades I took. So I started soon after market open. So 16th of June is today's trade. So between 6 and 7:38. So those are the trades I've taken today. Now, it's very handy to look at the trade performance once you have scalped this chart, because you are able to see how effective your entries have been. So if you look at your specific entries that you've taken, so I have an ATM attached, but I don't always let the price touch my target. I will exit the chart or exit the entries based on what's happening on the signal chart. But what this does is it obviously tells you what your result is of your trades that you took, okay? But it also tells you your max average, I think it's max average excursion or max average something. I don't care too much about the terminology of it. All that I know is that, I guess you can, find out what that is. It tells you what the position went against you. So when you entered the position, how far that position went against you before it hit its profit. So for example, on this entry over here, the price went $25 against me. Okay. It went a total of $435 in my favor, and I exited it at $250 profit. So it basically went, I entered the trade. It went, what's that? 4 times 5 is 20. That's 5 ticks. It went 5 ticks against me, which is obviously including the slippage. So 5 ticks against me, and then it went, $435 worth of ticks divided by 5 in my favor, and then I exited it at 250. So you are able to pinpoint how effective your entries are based on this chart. Now, as you can see over here, like this entry that I entered, the profit closed at a negative 129. So including commission. So basically what happened is the price went against me $125 plus the commission, and then it exited. So basically that hit its stop. So that's how you're able to just understand it a lot better. So I entered the position. It went in my favor by $10. So 2 ticks in my favor. But then it turned around and it went to its stop, which is $125 plus the commission, which is $129. So that's a bit of explanation around how to judge your effectiveness of your entries. And it's very important when you are taking trades on a signal chart or you're entering trades on a chart, because you are judging your entry efficiency. So that's how that actually works. So I've did pretty well today, or I've been doing pretty well on this chart since I've been trading it. I've been making a lot of documentation for it, so a lot of training around this. So I've also manually traded this chart when I prepared the document for it. So if you're looking at if you are looking at the document, and I'll just discuss that now because we haven't got any signals that have popped up recently. So if you are looking at the document for this this template, it's going to be inside the indicator settings. So immediately, if you go to the folder for it, which I'll just bring up over here. Okay, so you're going to find the link to this in the indicator settings. You're going to go to signal chart combinations, and you're going to go to signal chart combo 5. And this document basically explains, what the chart looks like, what we're looking at, and all the settings of the of the indicators and stuff. So a very good thing just to read through. It'll help you understand how that actually works. Okay, so this is the chart. Now, what we are looking for with this is we are looking for this marker to be left behind. So the Dodger blue one is obviously one of the breakout volume markers. So these breakout volume markers they're taking into consideration quite a few different time frames, and these time frames are all compounded or compacted into one signal, and that is giving you a signal of where that significant volume, where those market orders are being put in, that is going to impact price. And we've loaded 4 of them on this chart. So it's basically 4 times. We've loaded the same indicator 4 times, but all we've done is I've created templates for each of them, and I've made them different colors. So we're able to monitor a huge range of different settings and thus produce quite a few signals. Okay, I just want to bring up something else to make sure that everything is okay on the stream. Yes, it is. So if there's any questions, there should be a chat feature wherever you are watching from. I just got to be able to access it over here somewhere. I'm sure I'll figure it out, or they'll pop up as they come. Okay, so we're looking for markers to be left behind. Now, if we scroll back, there's been a few markers pinpointed since this orange one. There's been some orange, there's been some blue ones. In fact, I've got a Discord chat that I've been sharing my results in. And while we are waiting for something to happen over here, I'm just going to share some of those screenshots from there. Let's go from here. Okay, so so this was my trades from yesterday. We'll go to just the ones from today. Okay, which is from over here. All right, so from over here, we had our first signal. We had a white marker and an orange marker that presented itself. Now, I think that orange marker is still in position. So that's when I took my trades earlier. So if I look at that price, 11,215, I just want to see if that is, yeah, it's exactly the same marker. So that exact marker that happened earlier when I took these screenshots is still actually in place. Okay, so I entered positions over there. I entered 2 contracts, and they basically continued. I think I hit the markers, and then what happened is the white marker presented itself, and then the price went down. The white marker presented itself, and it got left behind, and then I closed the position. So the idea is to enter a position when the markers present themselves, and if an opposing marker, like if a marker appears and it goes against your position, so I was in a short, because this marker is going against my position, I exited the position. So that is the idea behind that, and very sustainable, in doing that. So yeah, so that's what happened on the Discord. So we're sharing some things in there. Now I just got to bring up this again. Okay, there it is. So obviously we're on the NQ at the moment. Now, if you want to use this on the MNQ, you can certainly do that. You can even just right click on the chart and go duplicate window and then choose MNQ. So if you're trading the micros, you can do the same thing. You can trade the exact same type of signals. Just bear in mind, though, that because the MNQ or the micro is a very different contract to the NQ, the volume areas could actually be slightly different, and you're able to take separate signals on them. But I won't look at that right now. I'm going to just close that one, and we'll just look at the NQ. So let's just hope that we have some signals come across on this session so we can show you exactly what they look like. Okay, so our very last, our last standing signal was over there. So you're also going to notice that there are 2 numbers either side of this line. So that as soon as that marker paints, okay, we'll look at the previous one. As the moment that that marker paints, it's going to tell you, it's going to start the count. So what happened is the marker painted over here, okay? From this marker point, the price has gone down a total of 212 ticks. So that's the bottom number. And it's also telling you that since this marker presented, the price has gone up a total of 58 ticks. So that is what those markers are telling you. And as soon as they are left behind, like in this case over here, it's going to tell you, those numbers are going to be correct. So right now, you'll see these numbers changing. There we go. The red one has just been left behind. So I'm just going to clear some of these. So this is what we're looking at now. We're looking at what the price is going to do. Now we're on a bar at the moment. So we're going to act on the signal at the close of the bar. So as soon as this bar closes up, I will take a long position because this red marker has been left behind. Now we do have an orange marker above, so we just got to be very careful with the entries on this. Let me just get an ATM in place. So this candle can either close up or it can close down, but this is the exact point where there has been action taken in the market, either to push the price up or to to reverse the price to come down. So we're gonna make a decision based on the close of this bar. So we'll just wait for that to happen, because it can close either side. It can close down, or it can close up. So we still need to decide which direction that the signal is actually valid for. So a little bit quiet right now in the market. So we are almost 9 p.m. New York time. It's also a very good time to trade this. So if you're trading, like I trade from session open, so if you're trading between 7 and 8:30 or so, there's more than enough signals in that period to be able to, scalp your 60 to 100 ticks of trades, or, of positions in that period. So very often that is going to be just enough time. And for most people to if they end with 50 ticks in profit, that it's a decent return. I mean, a lot of people, will be very happy with less, but that is very manageable with a system like this, because we've got individual bars that are 20 ticks, so you don't have to go many bars to hit your target. Now, I can, if I wanted to, I can jump the gun here and say, well, as long as this price is above, I'm going to buy. But it's a bit safer. It's a lot safer to wait until you've got confirmation on this candle to choose your direction. So we've got a few different tools on this page. So the shadow trading indicator itself is the one that is determining the coloring of the bars. So these arrows that you are seeing and these coloring of the bars, they appear in real time. So they don't repaint after the fact, and they also stay in place forever. They don't disappear or readjust themselves. When they paint, they paint. Even if the price has continued in a direction, they're still going to show those, those arrows and those divergences in place. Okay, so at the moment, we've got the red marker, or the crimson marker that has been left behind. So let's just see this bar close. And as soon as this bar closes, I jumped in a little bit late, but that is when I'm going to enter. So now we are working off this crimson marker. Okay, so we are going against another marker that is in place, but that has been there for a while. We've also got a white marker in place. So there's two markers that have just come into place right now. So the crimson one and the white one has been left behind. You see how that works? When they left behind, that is the direction that they are pushing. Now, it could be, we don't know how many bars the price is going to move in that direction. But we are very, very, very often able to get a very precise entry on our trades. As you can see from the results that I shared, the entry efficiency is extremely high. But we don't know exactly how far this signal is going to move. It could go 1 bar, it could go 2 bars, it could be stuck on the 1 bar. But we've got a good confirmation here that the price, that these are areas of interest. So we'll judge what the price does around here. We have got green bars. So generally when we've got green bars on the chart, the buyers are in control. And obviously when we've got gold bars, the sellers are in control. So the price basically now is in buyer's territory. So there's a few different things you can look at, when entering positions. Obviously this is one of them. Now, this area of contention, or this is the area over here where that significant volume was pumped into the market earlier. So we stuck between two solid areas over here. The price could literally do whatever it wants around there. Okay, so here we go. We've got a red arrow, okay, over here. We've got the white marker still in play. So we're kind of between two signals here. So I'm still going to keep my stop just the other side of this red or this crimson marker. Because if the bar comes and closes below this, then I know that this price is going to come down, or that is at least the next area. Now, notice too now how the crimson marker has gone out of play, and it is now trailing the price with the blue marker. So that right now is basically invalid. That red marker is invalid. So you can choose right now to either exit your position or wait and see what happens with the new marker that's in place. So it's very real time and updated tick by tick. So very, very, it's very informative, this. So right now, if this bar actually closes here, I'll be happy to jump out of this position, because then there's a good chance this price might actually be going down. So if you're ever unsure about a position, you may have the price fluctuate around a marker, but as soon as it gets its direction, it's going to run. So, if you're unsure of it, you can jump out and just wait for the next major confirmation, or move your stop closer. If you're going to move your stop closer, it's definitely going to be at a point, below the next marker. So, very small type of a stop in this situation. So again, we also have a red arrow over here. So, I mean, it is logical to exit, but I like to see what is going to be happening with this price, because we are still in buyer's territory. We may have a little bit of a bounce around of price. As long as we don't have our stop too far, we are able to, absorb any positions or anything that happens in the market. So remember, we generally have very small or very close stops in this situation. And right over here, the white marker is left behind. So I'm actually going to enter a sell over here. There's a few things in play. We've got the red arrow. We have got, this is basically a divergence arrow that's going to help us with direction. We have a white marker left behind. The price is in buyer's territory, okay? So it's on the cusp, really. So if you look at the momentum line positioning, it's with the price. So you see this line that we're looking at here, it's basically with the price. So we're kind of in a undecided environment right now, where the momentum line is with the price. It is literally going to go in any direction from right here. So I'm actually glad we got into a situation where we are on the cusp over here, where we got a losing position, because you get to see what also happens when, when trades get stopped out and what the signals look like. Yes, we did have an opportunity to close this trade earlier when we see what was happening with price. We're literally on the cusp right now of the price going either way, because remember, this is just a marker of where the price action is happening in the market. So to get a confirmation of this, it's either going to break up or break down. We acted on the first breakdown from there, but we're literally right here on it. So if this does get stopped out over here, I'll probably just hold off a little bit and wait for another stronger confirmation of the signal. Okay, let's see. So we literally right over here. Again, if the price closes above, so it's a good idea to look at what other markers are in play. So that one was out. Okay, so we got the white marker left behind, but I took an entry before into this one here. So I'm probably going to just hold off a little bit and just to see what's going to happen around here. So we kind of are between two supporting areas over here where this price is really, in action. So we could have acted on this white marker, leaving, closing. But like I said, we're right by this other area of contention. So let's just judge what happens there. We do have another divergence. So a very similar thing that happened over here actually happened up here too. So we'll monitor what that does. And we'll monitor what price does around this. So it's also it's also not a good thing to be completely direction biased. So you don't always think, we definitely should be in longs or definitely only shorts. The market is going to be bouncing up and down all day, every day. So rather have a bias according to the signals generated instead of a preferred direction that you want to trade in. Let's have a look. I'm just checking that all the streams are going fine. Yeah, they are. Okay, good. So yeah, you'll notice these arrows. They are in play. You see how they painted, or these arrows appeared as the bar closed. So you'll see those signals. So we're looking at a few different things on the chart apart from the breakout volume itself, which I still have the most confidence in with my entries. But we have a lot of other confirmation around, the divergences, the up and down arrows. A lot of people will just even trade those arrows themselves and be happy with the signals generated from them. I've also tried to keep this chart as clear as possible, so not having too much on it. It's not nice having a lot of details or a lot of things on your chart. So even having text is a bit much for me. So just having markers, we have a very clear picture of where the price is, what it's doing. So you can also set yourself up some, extra little trading rules of trading specific directions when the bars are certain colors. So like as example, gold bars only sell, green bars only buy, but then watching out for divergences and the arrows opposing your position. Okay, so I've entered two positions over here, and they both have hit their stop. So the first one, the favorable, if I look at the where is it now? It went in my favor by 105 and 50, and then went against me these values. So we were up a little bit, especially on the first trade. And then obviously we had our stop close. So over here, let's have a look at what's happening with the price. We've got our band over here, which is also our that's our trend following indicator. So we've got a few things. We've got the price, in the zone. So we want to see what's going to happen from here. Now it's, I know that we're trying to get signals, straight away, but often you could be watching a chart for a while and not decide to enter, based on where the price is. And especially when you've got divergences and you've got signals around key points. But for the sake of this video, I'm trying to get these signals in play and then run with them as they actually generate. So ideally here, I'm going to take another trade over here. So, I can go now and go a short position over here, which I will over there. Now notice how, again, I'm going to be I'm going to be clear on my entrance, on my exits. I would rather have small stop outs of positions than have long running positions at a loss. So as you can see, we're right on the cusp here. We've got gold bar, which means the sellers have we can cultivate in sellers territory, buyers territory, and you'll see that this bar updates tick by tick. You'll see it's going green. So we're literally on the cusp, on the zero line of the buyers and the sellers. So it's like a tug of war at the moment, and we're exactly at that point. But our last marker is this white one, and that has given us the signal. So we initially bought and then we sold. So we at this point now. We have this Dodger blue one still following the price. So if this Dodger blue marker gets left behind, I'll be happy to enter another position in that direction. So that's something that I look at doing also, especially, if you can see a continuation of that signal. We almost had a perfect situation earlier where both signals were left behind. Unfortunately, it hit into this previous support over here, or this previous area. So again, you see, we're on the cusp now. So we can decide, do we exit here or do we let it continue? So you see how close it can be. You can have a very small stop over here, and then you can exit over here, or and then you can wait until it breaks below again or breaks up again. So you can have a very small stop of like 20 to 30 ticks maximum around here. This one looks like, unfortunately, we had a small false little breakout to the downside. Again, it's probably a situation where I'm going to close this position. Okay, so buyers. So over here, I'm actually going to enter this one, and we had an area here where the sellers failed. We got the market. So it's a very contentious position right over here. So we got to basically be very careful around this area. Often you can see, from repeated attempts. So like this price has been struggling to come down for a while now. This is the exact area that the price is going to be, moving from. So, this is where we are right now. So it's good to have that pinpointed location of, so where you're going to enter or exit based on around that, and eventually the price is going to move. You're going to have, you're going to have a huge move from that point. It's going to happen. Now, hopefully, it doesn't happen too long after the price, doesn't bounce around too much. But you're going to have that situation where that is going to eventually take direction and run. The last thing we want to see, though, is more divergences and this marker holding out, where it currently was. So again, you might choose not to trade around a zone like this, between two markers. So it's really, I suppose it's a little bit more, more risk involved in trading between markers. It's better if the price is below, all the markers, or above all the markers, which happens, which happens obviously a lot too. that is when it's really going to take direction. Okay, so the blue marker, the Dodger blue, is still trailing the price. We'll see what it does around here. We'll see what it does around here. And also if any of these markers change direction or change their location, because these are updating tick by tick. So the signals generated by this white marker are waiting until the volume in those time frames that are being analyzed, if that produces a different signal at a different price at different time. So again, we're hitting this level again here. The price isn't breaking through. It's not like running through. We near previous divergences. So the red marker has been left behind. Notice that. Notice how there's a red marker over there. Okay, so I'm just going to exit this position for right now. And hopefully we're going to see this red marker get left behind, price break below, and then it's going to run down. So we've got the crimson marker in play right now. We still got the Dodger blue trailing the price. So we're going to see how these markers are left behind. So this is an area where they have pumped in significant volume into the market, and they are saying, well, this is where we're going to be acting from. So logically from here, based on what we're seeing, we have a few confirmations. We're still between two markers over here. So it's a little bit technical when you get into it, but when you get those nice runs, they're going to be really paying off very, very well. We have a few other confirmations here, like these divergence arrows and these divergence lines. We are still slightly in bias territory, so we've got to pay attention to a few different things happening on the chart. And we want to make sure our stop is at a location where it's where it makes sense. So this one over here, I'm going to put the stop a bit higher on this one to get it above this orange marker, just for right now. However, I am going to monitor what's happening around the price. So at the moment, we've got this Dodger blue marker. If this Dodger blue marker is left behind and the price goes above, I will definitely be exiting that position. So we do have an opportunity to exit a position a lot quicker or a lot sooner than it getting near the stop. So probably just a consolidation zone that we're in right now. The price is floating around a tug of war at the moment. The sellers have not just on this bar starting to have a bit more power than the buyers. So that is where we are right now. So notice how the Dodger blue line was left behind. So I'm actually going to enter another position there. Probably a little bit premature. It would have been better to wait until the close of the white. But notice how the Dodger blue was left behind on that bar. So we've got the orange marker, we've got the crimson, we've got the Dodger blue, and we've got the white. All of those are in play right now. And I'm actually going to close there because we have it left behind below the price. Probably not the greatest start to this session, but like I said, it's a very contentious zone where we are right now. It hasn't been as clear and crisp as it has been earlier. There has been a few areas where it's been like that. So we're going to just monitor and keep going at this, and then we'll monitor our results afterwards. See, now we've So the good thing too is that the marker gets left behind on the bar where it generated. So from that point is exactly where that action was taking place, and we're making decisions around that. So right here, we've got the sellers in control. I'm actually going to be entering the market over here. We've got 3 markers or 4 markers in play. Okay, we've got a few things going for us. This is a very good indication that the price is more than likely to be going down based on quite a few things. Obviously, we're looking at divergences. We're looking at the coloring of the bars. We're looking at where these breakout markers are left. So I think they finished messing around with us at the moment. And this price definitely looks like to be, to be going to the downside. Again, we've got to make sure that our stop is not too far away, obviously depending on what account you're working with and what your expectations are, what your risk reward or your risk tolerances are. You don't want to put it too close to the price, although it's not a bad thing. If the price comes and just takes you out, you're still not going to have a large risk on that trade. So you just managing your risk is obviously very important in this type of a setup. But the nice thing is we've got a lot of confirmation. So even if you waited until you had more confirmation of a signal before you actually jump in, and we definitely have that now. So entering a position in this range over here below, while the price stays below these markers, is obviously a lot better than entering it between them. So we are back here again. So we'll monitor what happens around here. So I've been caught out a little bit over here in this range, but it's good that we've actually seen the buying and the selling around here and what it looks like in real time. So obviously if I generate these last few trades, they haven't been 7266. I've got a bit of a drawdown over here. Guess that's what happens when you're trying to show something and you're trying to force trades or make trades happen at a specific time. So it's good we've got these points. So we definitely have a much higher probability of the price reacting from here away from these markers. And at the end of the day, that's what we're looking at. We're looking at it's a numbers probabilities game, and there's a higher chance of the price going a certain direction now than it going the other. I think on my previous session, I also had about 3 or 4 trades bouncing around some markets, and then I had a huge 100+ tick move in a direction, and that ultimately covers what you are, your small little losses around these signals. So it's obviously not advisable to enter more positions when you've got indecision over here. I would only really enter more positions once I get a confirmation or a further breakout below this level. So, we don't have to enter a lot of positions in a specific zone, and we can also act on the price movement, once that has really confirmed itself. Because remember, the banks and institutions, they often just, moving the price in the position, taking out stops. They'll be moving the price in a direction, taking out stops, moving it, taking out stops, moving up. It's all just like a stop hunting game, and all there just to get the guys out that have got their tight stops. So also be very careful not to have very tight stops when you entering your positions. And obviously, if your account balance is less than 10,000, it's not a good idea to trade the NQ. You can do this exact same thing on the MNQ. The last thing you want to do is lose 10, 15, 20% of your account on 4 or 5 trades, that go against you. Because remember, we've probably got about, I would say, a 70 to 80 to 90% accuracy with these type of signals. But you got to be able to accommodate, out of 100 trades, you got to be able to accommodate having 30 losers, and some, it's a complete, what's the word I'm looking for? A mixture of winners and losers. It's not like you're going to have 70 winners and 30 losers in a row. You could have, but there's definitely a mixed distribution of winners and losers. So definitely be able to accommodate having 3 or 4 or 5 losers in a row without it negatively impacting your account. So very little happening right now, unfortunately. We're getting to the 9:30 mark. The sellers definitely seem to be a little bit more or in control of the price around here. I'm definitely liking the position of these markers. So the other thing I would be looking for is if one of these markers had to paint below the price and get left behind and the bar closed above, that is not, I would not want to be in a short if that had to happen. So I started this session at 9 o'clock and it's 9:30 at the moment. So it's been going for like 30 minutes. It was a bit unfortunate. We were caught in a little bit of an up and down thing, but that is exactly how trading is. You will have those times where you're absolutely going to be jumping into a trade and it's going to run, just like it happened to me earlier today, where I entered into these positions and they literally just ran. The markers painted and they ran, and I had a very good, basically all my positions were successful. 16th of June. So I'm still up from the day. So where I started earlier today was at 6:07. So I started off on 5.8 in profit, carried over from the yesterday. So 5.8, I'm currently on 6.6. So I'm still up on the day in the few hours that I have been trading. And obviously, over the last 2 days, I'm up, 6.5. So it's pretty good. And it's just really trading these signals. So having those beautiful runs in price. I haven't struggled too much with this. I haven't had this over the last 2 sessions that I've traded. So it's just a matter of just managing, your positions around these signals. And if the price is messing around in a certain zone, just exit it and come back another time. So like over here, the price is reversed. We're still in this whole zone here. So I'm going to keep my stop. I can accommodate this, so that is fine for me. We're between these markers, so I'm really going to, I know that there is a lot of up and down around this area. I know that these are the contention points of price. So I've got to decide what to do around here. Okay, so I'm actually going to close that over there. We've got these markers, okay? So that is we know that we're in the zone of it, so we needed a breakout of that zone. Okay, so I'm going to enter again over here. We do have a lot of, we have had a lot of action within the zone, but if you notice, the price has quite quickly gone up through all these zones. So that's why I've entered a few more positions in there, and that is going to be in play. I'm watching my momentum line also. I'm looking at where if any of these markers change. So very important to see what these markers are going to be doing. So definitely, I'm keeping a very close eye on them. And I normally go up to about seven or eight positions on this account. So that is more than likely more what I do. We've got a divergence, but I'm still having the price above this area. We have quite a few divergences. So as I was saying, we've got these markers definitely, these arrows and stuff definitely do stay in price, but there's a few different things happening over here. So I've got to decide over here, at which point do I decide which area to exit a position if I do want to exit these positions. So here's my momentum line over here. It's not with the price, it's below the price at the moment. We do have these markers staying in place. So they definitely the points where there's been significant volume pumped in. So we're deep in buyer's territory at the moment, which is good. I'm not too concerned about this orange marker because that's been there for quite a while. These are the ones that have produced lately, the highest, these ones over here. So I'm going to go into another position over there, nice and close. My stop is nice and close. I've got this marker here in play. So between this marker and this marker here, sellers have come back into play, but it's coming off this resistance over here. So I am going to jump into another position over here, and I'm going to keep my marker over there. So this is the area of, this is the last part of resistance that we have. So because this was the last area that the volume was pumped in. So actually the first one. So this is the white, then it was the crimson and the Dodger blue. So those were the areas where it was pumped in. So again, we're between the zone. So we're going to play this one out. So since this white market produced itself, the price only came down once and twice. So that's been a good hold. And then when the blue one, the Dodger blue, came into play, the price broke down one, came up, came back to retest it. So I'm just checking these different signals to see what price is doing around them. So often what price does around these signals will also depend on, give you a good indication of what the price is going to do. So the crimson one, this is where it posted. Okay, came down. The price actually went right through it, came back down, bounced around it, broke up above. So we kind of got a support area over here. So this one over here is our level. I would say our strongest level at the moment to determine price direction. Basically the pivot point, so this is our strong support. That's our pivot point where it's gonna run from either of that direction. It's gonna run either way from there. And I'm ultimately after at least 100 tick, run in the price. So that is, when you're accommodating a few losing positions, and you have that runner that gives it to you. Yeah, so often I could have 2 or 3 losing positions in a specific zone. I've had a lot more today, though, unfortunately, or in this specific session than I normally would like. It's actually been 1, 2, 3, 4, 5. 1, 2, 3, 4, 7. I've had 7 losing positions in this zone. So 7 positions in the zone that have gone against me. So from when we started. But the really good thing is we saw these the signals in action when they actually paint. Another thing too, we've got support and resistance lines on the shadow trading indicator, but we don't really need them in this instance. So if you go into the shadow trading indicator settings, you're going to notice there's a thing over here called draw support resistance lines with these red and green lines. Don't really need them in this situation, so we can remove them and then go from there. So I have moved my target out of the way. I want my target to be far away from price because we finally got this, this breakout that we've been waiting for these signals. So we were caught out a little bit, with the white. We were caught out with the price closing. So, when you trade this chart yourself, you can make decisions on when you specifically act on signals. And also in a specific direction. You can choose that, but don't, like I said in the beginning, don't be stuck on a specific direction that you want to trade, because very often the price is going to do its own thing anyway. So what I'm looking for next is I'm looking for one of these breakout markers to be left behind against my position. So that is ultimately what I'm looking for, or I might decide, I might take a certain target profit. So if you've had a few losing positions and you want to exit the market, you want to just cover your bases and then come back again for another session, that's also fine to do. But ideally, you want to be able to battle through the hard times when they do present, and take advantage of they've actually given us the area where they where they've pumped in that volume. They've given us the area of where they've made the decision, and ultimately they've proven to us now they want to push this price up. So that's what this is giving us. It gave us a few signals coming down and then coming up, but ultimately now that is what they are showing us. They're going to push this price up. So, they've taken out a lot of stops, including mine. They've taken out stops. They've got a lot of people out the market. Now they're going to run this. They're going to run this trade. They're going to run this direction. But also, if the price is struggling to go up, if it's really struggling to go up, then they're going to reverse the price. I mean, that's just what they do. And these breakout volume markers is going to give us those, it's going to give us a very good indication when they do that. Not all the time, but very often they're going to give us that indication of where they are going to reverse that price. So I'm still going to just keep my target right out of the way. I'm going to keep these. We've got some more divergences though. So that's another thing, you can decide to hop out of the market when you're seeing that, because very, very often you are going to have those as points of reversal. How much is not always evident. How far that price is going to reverse, but that could be a time where you could say, well, I'm happy to jump out there. I like to rely on my markers to give me some more confirmation on that, even if the price reverses and comes back down to my entry. A lot of people might not be able to do that. Allow the price to come back down because they might be working on some sort of a funded account, trailing stop type of a situation. In that case, you end up cutting your winners because, you scare the price is going to reverse a little bit. And then, your trading, your account trailing stop is going to kick you out. So, that is, one of the pains about having like these funded account systems that are running. You got to be mindful of your trailing stop that's in place. So price is definitely failing to go up here though. So we've hit a few brick walls. So what I'm going to actually do is I am going to bring I don't like bringing my stop too close to the price, but I am going to bring it in a little bit. And, obviously if the price breaks below this orange marker, then this move up is basically invalid. So that to me is the logical place for my stop. And I would like to see, this price obviously run a bit further. There's obviously a serious push in the market. So, there's obviously some reason that they want to push this market up, because we've got a lot of divergences, a lot of errors here telling us that the price should be reversing, but there's something on the go that they want to push this market up. So that's why it's not always 100%, you can't rely 100% on these arrows and stuff to enter your positions, even though very, very, very often you are going to have them determine, these price swings. It's just sometimes you could have a genuine, market makers that are pushing this price up for whatever reason that they want to do. But, at the end of the day too, if they fail to push the price up, they're going to bring it down. The whole time they up and down, up and down, up and down. So they're gonna come take out stops and run the price where they want to run the price. That's just what they do. So I'm going to wait until we have a volume confirmation come out. So we'll see, was there too much volume and pumped in earlier into the market that these are the areas, that produced the last signal, or are they going to pump in more volume that was used to generate these signals into another signal coming up? This we're also seeing in the background here. We've got the the trend following indicator. So that's just giving us a whole lot of different moving averages of price. So they are incorporated into there. That's also something you can look at for price breaking through, especially if you're in a long running position. So if you're in a long running position and you don't want to, and you want to decide where to exit your price, I know over here, very often the price could stay underneath this cloud for an extended period of time and then break up. So, that could also be something that you monitor, that you use. Obviously we're going to have a lot of price up and down in consolidation zones and stuff, but it's also a good thing to use to let that price run in a direction. So we'll come back over here and see what they're doing over here. In this case, it looks like the price might have met its, they've pushed it up enough. I'd like to hang on to my positions and catch a really good run. I don't mind too much if it comes back down. I mean, I don't have I don't trade a funded account system where I've got a drawdown or anything like that. So that's why I like to let the positions play out and then just monitor what it does. And very often that is going to get me into those much larger runs in price. So I'll very often have a 100, 200 tick move plus in price instead of just capturing a 40 or 60 tick move. So I might sometimes be caught out, not caught out, but I might sometimes be in a situation where I get, stopped out a little bit in a specific zone, but I'm confident that there's going to be those periods in the day where these zones are going to plot their values like they have over here, and then they're going to run. So it's kind of for every type of taste. You could enter based exclusively on what these signals are telling you. We did have a little bit of a stuff around over here, but like I said, that's if it was going up and down straight forward every single day, anybody can do it, eh? So they definitely have these trading it's a very tricky business. So you've got to be able to withstand some losing positions and make 100% sure that they are not taking you out of the market. So don't freak out if you have 5, 6, or 7 losing positions, because you're going to have this type of a situation where you've got this confirmation of a very good breakout, and then you jumping in on that. So we're getting to the stage now where we are at a majorly overbought price. And you'll see that the bars are coloring to this tomato color. So this could be a point where you say, okay, well, I'm happy to jump out over here. And very, very often in the price, you're going to have these bars color change, and very, very often they're going to reverse in price. So like over here, I probably will do that. I wanted to rely on this marker. That's ideally what I wanted to do. So let me just wait for this bar to close and then make a decision on that. Yeah, okay, I'll jump out there. I'm happy to jump out there. So we had a good little run there. I mean, it wasn't, if I look at my entries, so there's my entries, and we had a 92 tick move. Okay, could have been a little bit more. I could have exited as that bar was changing color, which would have pushed it a little bit higher, to like 110. But 90 ticks, this could be a small little turnaround, and then it could run up another 200 ticks. But that's just, because we had a few losing positions in here, it's good to wait out for that nice running position. So I'm actually glad that this happened as it did, because I also don't want to be just showing you perfect entries. I also want to be explaining to you my, my thought process around taking entries. These markers, I mean, they did exactly what they were supposed to have done. As we did enter positions. I've spoken in the group about entering positions between markers, where you got more of a risk in there, and that's what I did over there. I entered between the markers, but you can also decide to specifically act when the price breaks out of a marker, or a group of markers. So, for example, if you were watching all of these markers. So there's the white one, there's the crimson one, there's the blue one. You see how the I'm just going to remove all these things. I'll end it over here, but I was going to explain something very quickly. So obviously the orange one started very far back. The next one was the white, which started over here. Okay. The next marker that painted was your crimson, which is over here. And the next marker which painted was your Dodger blue. So in watching this, the very first breakout below all of these levels was over here. Okay. So that would have been an absolute signal to sell. Okay. 100%. 7 out of 10, 8 out of 10, 9 out of 10, the price is going to run down. Okay. Because all the markers are above the price, you sold. Okay. But then you got to make sure if the price does reverse, you exit. Now, I waited a bit longer. I think I exited over here somewhere, over there maybe. So we're back in this contention zone. So get out of your positions and then decide again. Okay, so we are right above. Here we go. There's the next area to enter a position. Again, the price came down. You're in this contention zone. You're above again. Again, that's your next area to buy. The price is above all your volume breakout markers. And that's basically ultimately what we did to hit that move. I did it a bit lower because I was more confident of it over there. So that is in a nutshell how these markers are, how they paint, how you react around them. And like we did over here, on occasion, you are going to have the price bounce around for a while. But you watch this chart for a while, you're going to see that these markers are going to stay in place where they paint, and you're going to have the price react away from them, and you're going to have your run. It might be immediate. I mean, we could have very very, very easily had this price just come down. But no, they decided that wasn't their plan. So instead, they did that from here. And here we are at the moment. Okay, so I'll just give a summary of what I did during the session. So we started off, let me just click on generate over here. So generate. So we started off the session over here. So this was the first trade I entered. I lost 169. So I had 3 losing positions. I closed off a position early. Then I closed off another position early. And then these ones I closed off early. Okay. So I went down from 7.3 to 5.7. And then from 5.7 to 8.7. So $3,000 in there. So basically from when we started the session, which was over here, 7.3, from 7.3 to 8.7. So, as you can see, there was a bit of a roller coaster in there. But, that is what trading can be sometimes. You're not always going to have. Look, I had a roller coaster there too, where I was committed to my signals, and I let the price stop it out. So you're not always going to have, you're going to have a random distribution of winners and losers. Yes, you might be very, very lucky and have a shitload in a row, go from 2,400 to 7,300 in profits. And you think, oh my God, this is absolutely incredible. There's no looking back. But be prepared for the times where you will have a few positions that go against you, but make 100% sure that when you do have 1, 2, 3, 4, 5, 6, 7 positions go against you, that you're not out of the market. You don't want to shit yourself at losing your 7th position and then like, oh my God, I'm out of here, I can't handle this anymore, and then you're out. If that happens to you, then switch to micros and trade those so that if you have 7 losing positions, it's like losing 1 mini contract instead of losing 7, full contracts. And it was good of me to exit over there, because that if you look back on the signal chart, you're going to notice that the chance of price reversing around a tomato candle or a red candle is extremely, extremely, extremely high. So you can go back anywhere on the chart. So if I just page back, look, so it's obviously it's cyan for the bottom and red and tomato for the top. So there is your so there's your red and tomato, and there's your cyan. So anytime you go back on the chart, there we go. We've got a tomato, price reversed. Look over here though. You see, similar look to what we have here. Yes, the price could still continue up, another 100 ticks, but more than likely, I would say a very high percentage of times when you do have these bars this color, you are in a major disadvantage. You're taking a chance if you're still in a long position, in other words. So you can scroll back anywhere on this chart and you're going to notice, like, there's your tomato, there's your cyan. Now there's a cyan bar there, but then the next bar went gold. See, cyan. So there's our tomato, there's our red. So when it goes tomato and then goes red, that is like there's a very extremely high chance the price is going to reverse. But then again, not every time. It's just a very high percentage. There is your what color is that? So if you go into the indicator setting, you've got values in there, and medium slate blue is that second level. So there's the colors: tomato, maroon, cyan, medium slate blue. So again, when you have the color change from cyan to this, extremely high chance that the price is going to reverse. And as I said, these bars paint in real time and they stay there permanently. So look over here. This bar here, it's cyan. Okay, the price didn't turn around. Next, this bar was cyan. We've got all these divergences. So it's not going to correct itself after the market didn't turn around. So that is why you can rely on, these tools, because, there's only 1 or 2 tools that I have that correct themselves. And that's just because of the nature of how they work. But this definitely is not one of them. When you have, when these bars paint in real time, as you notice, the bar changes between gold and green in the bar. How that bar closes is exactly how that bar is going to stay forever onwards. So, that is why, this indicator is exceptionally brilliant in determining trend. You might get caught out a bit if you strictly rely on the arrows, but definitely working with divergences, momentum line. So another powerful thing about this indicator is the momentum line. So I'm scrolling back on the chart, which I don't normally like to do, but exactly where you see this momentum line right now is where it would have been in real time. So you can see how we've got divergences. We've got a cyan bar, divergences, momentum line is facing up. Very high chance this price is going to go up until the momentum line catches back up with price, which it did over there. So, this type of thing is extremely, extremely accurate. And over here, it proved to do the same thing. Good. And look up, it's nice to look at these signals now saying, the price has gone up 137 ticks from there, 212 from there. Sorry, not 212. 212 down, 192 ticks. So from the white marker, the price went up 192 ticks. Now, obviously, we didn't catch that 192 tick move because we were in sell positions and stuff. But as soon as this price made its breakout on the tick that it made its breakout, it did what it did. And these values are still staying true until something happens in price above and there's a significant push down or whatever. But all in all, I'm very happy with that session, even though I had 1, 2, 3, 4, 5, 6, 7 losing positions. We had our positions ahead where we let the price run. So it's also good to look at your losing positions, and you're looking at, even if you scroll back, 244, 190, 260, 150, 160, 150, as long as your winning positions are a lot higher than your losing positions, that's what you ultimately want. You want to at least minimum double, ultimately what you want to do. And you will come out ahead, even if you have a session where you have 7 losing positions and, so on. Okay, good. I'm going to leave that there. I hope that was helpful. As you can see now, that you saw the price, the bar go gold over there. That means the sellers are starting to have a little bit of impact in the price. However, whatever color that bar changes to at bar close, it will stay. So just like we saw earlier, this gold bar over here changed to green, boom. Another thing too is you can say, I'm only going to enter long positions on green bars, or if the bar stays green, I'm going to make sure I'm only in long positions or gold short positions. Even then, you will have less, losing positions around, situations like this. But as long as these type of situations do not take you out, it does not ruin your account. You don't want to have situations where having a few losing positions takes you out of the market. Cool. Okay. Thanks, guys, and have a great day further. And I hope that was very helpful. There were a few periods of times in the trading there where we were in slightly larger positions than I would like to have been, but at least you got a good framework of how I designed it and how I think what price is going to do.